It's a bright and beautiful Monday morning from Lagos, Nigeria. Welcome to the new 1-hour Business Edge. Now, throughout the week, we'll be bringing you and helping you to connect the dots of the continent's biggest business, financial, and economic stories. We'll show how the decisions of policymakers and governments affect your lives. From Nairobi to Algiers to Johannesburg, Cape Town, Pretoria to Kigali, Kampala, Accra, Abuja, Dakar, Lusaka, and more, Business Edge is putting African business decisions front and center. I'm Tolulope Adeleru-Balogun. Now let's get straight into it. We start with business headlines. Following China's heightened interest in black tea, Kenya is looking to export the commodity to the country. During a tour of the Induti tea factory, Muthoni Gichohi, ambassador designate to China, noted that while China is the world's top user and exporter of green tea, consumption of black tea was also increasing. She further added that she's planning to introduce black tea to China to help strengthen Kenya and China's bilateral relations by increasing Kenya's exports to the country. She says this, of course, will also help improve Kenya's economy. According to the International Monetary Fund, a flexible exchange rate will aid Kenya's economy in insulating itself from external shocks affecting its currency, which is now trading at record lows, strangling supply chains. The weakening of the Kenyan shilling has raised concerns that the depreciation may be passed through to consumer prices. After falling to 117.04 on Friday, the shilling hit a new low versus the dollar, signaling a further rise in the price of imported goods such as petrol and cooking oil. If the shilling continues to decline, there is a possibility that disgruntled consumers who have already been stung hard by large increases in food and fuel prices could become agitated ahead of important elections in August. Tanzania is getting closer to realizing its aim of establishing a $40 billion liquefied natural gas project after first agreements were signed by the government and firms such as Equinor ASA and Shell PLC. According to President Samia Suluhu Hassan, the newest signing will pave the way for a host government agreement before the end of the year. The so-called HGA lays out the project's technical, commercial, and legal conditions. The development of the LNG export project might begin as soon as 3 years following a final investment decision and would follow a decade of lengthy discussions. ExxonMobil, Pavilion Energy, and Medco Energy are among the other companies collaborating with the country. In the first quarter of 2022, 32 Nigerian states, including Rivers and Kaduna, received no foreign investment. The National Bureau of Statistics says only Lagos, Oyo, Katsina, Anambra, and the Federal Capital Territory drew investments during the period. The entire value of capital imported into Nigeria in the first quarter of 2022 was $1.6 billion, down from $2.2 billion the previous quarter. Capital imports fell by 17.46% to $1.9 billion in the first quarter of 2021 compared to the same quarter the previous year. Portfolio investment got the most capital imports of any category, accounting for 60.87%. Other investments accounted for 29.28% of total capital imported in Q1 2022, while foreign direct investments accounted for 9.85%, around $154.9 million. The parent company of the biggest bank in Zimbabwe, Commercial Bank of Zimbabwe, CBZ Holdings Limited, plans to invest 2% of its annual income towards green projects, a first in the southern African nation. The lender's CEO, Blessing Mudavanhu, says the bank's plan to increase the use of green energy will include funding solar projects by households across the country. Zimbabwe relies on electricity mainly from its hydro-powered Kariba power station and coal-fired plants, with an installed capacity to produce a combined 2,100 megawatts. Owing to frequent breakdowns of the coal-fired plants, the country has an acute shortage of electricity, which results in prolonged power cuts. When possible, Zimbabwe meets its power shortage through imports, mainly from South Africa. And that's it for the business headlines, touching base with some of the biggest stories here on the continent. After this, let's talk how African private equities are navigating investments in a tech bubble. This is Business Edge. This is the new 1 hour Business Edge, and let's not forget we've taken business headlines already coming from the continent, and in the course of the show we'll also get into the international business stories. Lekan Obanjo is standing by to give you that. We also have a new segment we're introducing called Money Mondays, all about personal finance and how we can make sure we keep a few extra naira, rand, kwacha, shilling, whatever it may be in your pockets. And now to our conversation for today. For every bad rep the African continent gets in terms of its politics, infrastructure, shortcomings, and poor socioeconomic systems, its technology industry gets a double dose of the opposite. From a gamut of technology startups innovating for some of the continent's dire infrastructure challenges to a constantly growing community of hubs and enabling programs, even the amount of funding constantly coming into the sector is enough indication that the global tech industry is placing a huge bet on the continent. Africa's tech entrepreneurs raised more money in 2021 than they had in the previous 2 years combined. According to this year's numbers, will almost likely shatter that record again in 2022. Due to the smaller number of agreements in the $1 to $5 million category in 2021 compared to the $5 to $50 million range, there is unlikely to be enough supply in the market to meet demand as companies in the $1 to $5 million range increase ticket sizes. Investors have not been let down for the most part. Africa continues to boast of many startup success stories across many sectors from fintech to healthcare, with many of these startups concentrated in Nigeria, Kenya, South Africa, and more recently, Egypt. And while in a lot of locations, governments continue to prefer counterproductive policies that frustrate the efforts of the industry's stakeholders, in others across the continent, governments are sitting up and paying attention to how technology development and innovation can contribute even more immensely to economic growth and sustainability. Joining me today is Shirley Somuah. She is a partner at CardinalStone Capital Advisors, which is a full-service investment banking firm and financial services company which helps its diverse domestic and foreign clientele with financial advisory, asset management, securities trading, and much more. Shirley, welcome to Business Edge. Thank you so much for joining me.
Hi, Tolu. Good morning and thank you.
So I like starting these conversations off with sort of establishing how we've gotten to the point where we are right now. And over the last decade, the African tech sector has witnessed a very serious boom and has attracted billions of dollars in investment. So how did tech become such a valued sector in a continent where the benefits of technology seem to evade the majority of Africans?
Thanks, Tolu. So Africa certainly has many challenges and a long way to go, I think, both in developing a vibrant middle class and more broadly ensuring prosperity for the majority of the population. But that being said, I think many of the challenges we have are actually the reasons why the continent is ripe for technological innovation. And I would disagree a little bit. I think that it may not be as obvious and perhaps not the most cutting edge technology, but actually African consumers have benefited quite a bit from technology and tech innovation. The cliche example would be mobile phone penetration, where because we didn't have landlines, we absolutely leapfrogged, and the average penetration of mobile phones in many African countries was really high relative to what would have been expected at the initial investment phase. I think if we think today to financial services and fintech, which has been a lot of the investment hype, if you look at just electronic money transfer and mobile money broadly, again, African consumers have benefited from the fact that a lack of banking penetration has meant that we've had to innovate and have the ability to do transfers much faster and more efficiently than even in many developed markets.
And I think that's a very key note, because I often hear sometimes when Nigerians in particular travel and maybe someone has to make a transfer, they're hearing 2 to 3 days. Meanwhile, it's instantaneous here. So that leapfrogging has been something that has benefited people. So in terms of fintech, healthcare, health tech, whatever, edutech as it may be, are we living up to the hype? What are we seeing in terms of the success stories for the continent?
I would say it's still very much day one in the African investment landscape. broadly speaking, and then particularly in tech. And so I think it's early to have a conversation of whether we've lived up to the hype or not. But if we're to think of different measures of success, perhaps one of them being the sizes of businesses and valuations, then in some senses, I think there's been a lot of very positive traction. 5 or 6 years ago, there were no African unicorns. Today, there are about 7 unicorns. So businesses valued at over $1 billion. By many measures, both for the businesses and their investors, that's been success. If we think about the scale of businesses as well, I think from the scale and from the number of Pan-African companies that we have versus 5-10 years ago, that also has been quite a big success. So still early days to say fully whether it's lived up to the hype or not, but positive traction for the industry overall.
So let's look at some of the money coming in. So according to data from Partech Partners, Africa's startup ecosystem received a record $5.2 billion in funding last year. And that basically led us to assume that there's a surge of investor interest. Given the current global realities and how this year is shaping up already in June and some of the things we've seen, do you think that African tech can still meet or possibly even surpass the $5 billion mark this year?
If I had a crystal ball, I think I would make a lot of money from answering that question. So you say $5 billion to startups, but more broadly speaking, the private capital landscape in Africa had about $7 billion in investment in 2021, a record, and then a big jump from 2020 with COVID and the overflow from COVID. I can't say whether we'll do $5 billion this year or more, given where things are. I would say, however, that even though globally there's been a pullback given many of the macro issues, there continue to be lots of very exciting opportunities. And I expect that there should be strong investment in the continent by people who are taking a long-term view.
So you talk about the pullback, so let's get into that a bit, because while we're happy with the numbers that African tech is pulling in, we're seeing tech companies now start to report some challenges. Some of this revolve around the high cost, which is largely due to mass recruitment and even more. With the quick growth and investments we've seen, what are some of the issues African tech companies are running into now? What's coming together to create the challenges and particularly the high cost that they're running into?
So starting from your point on high costs, I think costs are going to increase as businesses scale. They have to invest in their operations, they have to invest in talent, and so naturally costs are going to increase. But more broadly speaking to the challenges are global and not unique to African businesses or African startups. Many businesses are still dealing with overflows from COVID. We had global supply chain disruptions, which have been very significant. We've had this year then also the challenges of the Russia-Ukraine situation. Inflation in the US is at a 40-year high. And so globally speaking, macro challenges have hit everybody. And then coming to Africa, I think looking at many of our economies, particularly in West Africa, inflation extremely high, dealing with currency pressures as well. And so that overall has affected businesses here, but not unique to African startups.
Very true. So there is talk of now maybe a bubble happening with the African tech ecosystem. So let me get your thoughts on that. Looking at investor sentiment, how your clientele is reacting to some of the things you're putting on the table in front of them. Is there a bubble coming? Is the industry in a bubble, or the potential for a bubble in the African tech space is still one that's quite far away?
I think this bubble conversation has persisted for many years now, but perhaps for good reason. Partly because valuations have been so high, but also because of the pace of increase in valuations. People are thinking, well, that was $1 billion how many months ago? Today it's $2-3 billion. So I can understand where the sentiment is coming from. I think in some respects it's justified from the high valuations, from the large amounts of capital, and from the speed at which funding rounds are being closed, without as much scrutiny and without as much due diligence. In terms of the bubble bursting or what sorts of pressure startups have to think about, I think there will be some level of pullback, but that level of pullback is probably appropriate in many senses. The businesses that were funded over the last several years without much scrutiny, which perhaps should not have been funded, and there will be that correction. But broadly speaking, to my earlier point, I do think we're still at early days for the investing ecosystem. There are many great opportunities out there. Those businesses will continue to get funded. From a cycle perspective, valuations are likely to be more moderate, I think, given just the overall global environment, but the best companies will continue to get funded.
So I'm going to ask you about that crystal ball once again, because sometimes a bubble bursting is all about really unfortunate situations and things that people really did not predict happening, like a storm in a teacup. But for the bubble for the African tech ecosystem to bust, what are the 3 or 4 things that would have to happen?
So I suppose back to this crystal ball point, I wouldn't say there's a bubble that's going to burst per se. I think there will be a bit of a drawback in the levels of funding, in the speed at which people are getting funding, and in the valuations. But broadly speaking, if you think of what are some of the underlying fundamentals of the size of the population, the lack of innovation and the level of innovation required, the fundamental businesses that need to keep running, I think there will continue to be investments, just more moderately priced.
All right, Shirley, please hold on. We're going to continue this conversation in just a bit. Fintech seems to dominate the conversation when it comes to the African tech ecosystem. But is fintech the only tech option open for investors? And what are we to do with Africa's governments when it comes to this space? Some are embracing the potential of the tech space, while others are seemingly frustrating stakeholders in the industry. The conversation continues on Business Edge right after this. And still with me is Shirley Somuah. She's partner at CardinalStone Capital Advisors as we look at how African private equities are navigating investments in a potential tech bubble. Now, Shirley, one of the suggested reasons that we're seeing in terms of how things are playing out has to do with overheads, as you mentioned, of course, yourself. It has to do with how things are really playing out for the tech companies. When you look at all of this and the issues around data and inaccurate data, facts and figures, and how you can even make a real investment when you're not sure of the true and genuine picture. So my question now is, how much of a problem is the lack of data for the African tech industry? How do investment companies, how do private equity companies, how do companies such as your own, who have to make decisions for clients, do so when there is an environment where data, facts, and figures are lacking?
So data is certainly a challenge, both in early stage investing and in private equity investing more broadly. That being said, it's not a new challenge. I think generally macroeconomic data is tough to come by, and even harder when you look into specific sectors and in other parts of the world would find clean, pretty reports that give you the information. But given that it's not new, I don't think you can point to data as a reason for recent challenges in either fundraising or potential pullback. In terms of making decisions with limited data, one is to just make sure you understand the markets in which you're investing. So for instance, if an investor was to make decisions perhaps in Nigeria, looking at a population of 200 million and saying that based on this, if I get X% of the market, here's what I'm going to be able to do. That is missing the fact that Nigeria has really poor infrastructure linkages, and to access that population of 200 million is not trivial given that. And so the data challenge is there, but taking a bottoms-up approach and really understanding the micros, I would say, beyond the macros of specific sectors helps to overcome that. And then, of course, being conservative just generally in projections and in taking an investment view. And in that case, better to be surprised by having been too conservative and finding things are better than expected than the other way around.
Very true. So my next question fits into something exactly that CCA does. Now, for a long time, fintech has dominated the conversation. When you mention the African tech space, you're literally going to see more fintech conversations or more fintechs coming up in it, especially with the issue around the terms of funding coming in. But with the bubble conversation and a possible decrease in funding, where should investors be looking outside of fintech? What does it take to successfully invest in non-tech or non-fintech tech startups on the continent? There we go.
Yes. So fintech has received a lot of hype, partly because given that these are consumer-facing businesses, they do need the publicity and need to be top of mind. That being said, broadly speaking, over the last several years, financial services has received lots of investment, and IT/tech and telecom in general. In terms of other sectors, one of the most exciting over the last several years has been healthcare. I think the pandemic showed all of us how broken our healthcare infrastructure and system was, and that we need to invest more at home. And it's one of the areas that we've seen the most investment interest and engagement. A couple of others I would say are agri-tech and agri-processing. again, given some of the slight supply chain disruptions, pardon me, we're realizing that we need to do more to be able to feed ourselves in various African countries, and we're seeing interesting investments there. And then I would say consumer discretionary as well. It's been a challenging last several years macro-wise, but there is slowly a growing middle class in many African countries who are more discerning consumers. And so the consumer discretionary space as well, I would say, is the third one where there's been lots of investor interest.
We tend to hear a lot more about venture capitalists, angel fund, angel investors, and Series A, and all of that when it comes to this conversation around the tech space. But a CCA is a private equity. You work with clients to help them. So in terms of what private equity such as yourself are doing in this space, just run us through that as well quickly.
Okay, great. So CardinalStone Capital Advisors is a growth stage private equity investor focused on West Africa, with Nigeria and Ghana being our priority markets. If I think about the distinction between venture capital and private equity, the way I like to describe it is that as private equity investors, our first mandate is not to lose money. And so we are fully focused on the downside before we even think about the upside. Whereas venture capital investors are typically thinking, how big can this be? And really focused on the upside. That's one distinction, although obviously we all want to make money. I think the second would be from a portfolio approach and diversification. A typical private equity fund may make perhaps 10 investments or so out of a fund, which is why it's important to focus on not losing money, because each 10 of those carry significant risk. Whereas venture capital investors are often doing, depending on the stage, smaller investments in a larger number of businesses, and so can afford to have a few completely lose money, because the other few that perhaps become unicorns can compensate for that and return the entire fund. So those, I would say, are some of the distinctions.
Okay. So that being said, now we're seeing a lot of focus centered on a few countries and a few capitals in this conversation when it comes to the African tech space. And that namely is Nigeria, South Africa, Kenya, and Egypt. And the figures support this in terms of their population sizes, mobile network connections, as well as professional developers, and even the GDP conversation around these countries. But do you think going forward in the next, maybe to the end of this year, even in the next 2 to 3 years, that the focus will remain on these countries for the considerable future? Are we starting to see other players who are sort of starting to compete for attention and money and also develop their own hubs so that they can get a share of this investment and funding?
For sure, there have been a small number of countries, probably 4 or so, that have dominated investments. And as you said, partly based on population size, GDP per capita, but then also the ecosystems that they have for investments. That being said, I think we're starting to see that change a little bit. If we think about Wave, for instance, out of Senegal, which had a significant fundraising event, that's not one of the more traditional markets. I expect that going forward, we will see more for various reasons, partly because as attractive as these top markets are, they're also highly competitive. And it can sometimes be easy to build a challenger from an outside market and then come into the larger market. So I expect more of that. And then as a continent, there's been a focus on regional trade zones. And as those provide scale, so for instance, within the Francophone zone of ECOWAS more broadly, I expect that also should create markets that in combination give the sort of scale that today you only see in the Nigeria, Egypt, Kenya. So yes, I do expect us to have more challenger businesses, coming out of the non-traditional markets.
Again, something we focus on with this conversation is the funding that's coming in from outside the continent. But let's look at funding that's here on the continent for the tech space as well. We've seen that there is a growing capital flight from many sectors in terms of indigenization across the continent. Considering this, what impact do you think local or domestic investors can have in the tech space over the next decade? Or even have they had any in the past, really? Or has it really been a game dominated by foreign investors?
So it's an interesting question. And I think there's been a lot of conversation about where investment flows are coming from. And there has been a lot of foreign investment in particular. I would look at indigenous investors from 2 perspectives. I think they're the more traditional indigenous investors of high net worth individuals and institutions that have been in the market for a while. But more recently, the tech successes are also developing a new breed of indigenous investors who are successful founders who've exited and are now reinvesting in the ecosystem. Indigenous investors are extremely important. The big checks may often come from outside, but it's difficult to invest successfully continuously if you don't have a deep understanding of the local market. And in fact, we find these days that many savvy international investors don't want to invest in local businesses if they don't have some local backing as well. Because whether it comes to helping navigate regulatory challenges or better understanding supply chain issues, the local investors have a very unique role to play in that. And I expect that to continue to be important going forward.
All right, Shirley, my last question is going to wrap up a number of factors for you. And I did mention earlier that we've seen different takes on how African governments are approaching this technology sector and technology and innovation drive that's happening across the continent. Some seemingly are coming up with policies that are more stifling to the environment, and some are really opening their arms. But in terms of the deciding factor in Africa's tech and digital prosperity, what do you think is really going to be the one thing that pushes this over the edge, or that really pushes us to where we need to be? Are we looking at government policies? Because one policy can affect hundreds of thousands of startups. Or is it about internet penetration? Or is it going to be about access to funding for innovation?
So the short answer is all of the above. I don't think that any one thing is going to be the single catalyst. Regulation is important. And while there's been a lot of commentary on challenging regulation and perhaps regulation stifling, I think our governments are doing quite a good job in trying to stay abreast of what current technology is and how to regulate that. One of our businesses, for instance, AppZone, just received a switching license from the central bank and has launched a blockchain switch. That's a regulator that's being proactive about the innovation that's required. In terms of the other things, the funding environment is going to continue to be important. As much as there's a drawback, I think that the local investors and more long-term view international investors will continue to be in the market and continue to play a very important role. Perhaps if I was to say one thing, one of the single biggest challenges, pardon me, I think is just talent. We've underinvested in our education systems over several years, and we're seeing this in the lack of talent for many businesses. You can have great regulations and all the money, but if you can't find the people to build the businesses, then you're stuck. And so that will continue to be an important piece as well in ensuring that the technology landscape and the investment landscape in particular continues to develop.
All right, it's a fantastic note to end the conversation on. Shirley, thank you so much for your time today. As we progress in this year, and of course the year rounds up as well, I know we'll definitely be talking more about the African tech space.
Thanks, Tolu. Have a great day.
You too as well. And the money coming in is a lot of money going to almost literally the fintech, but it's not the only sector. As you heard my guest mention, there's edutech, there's healthcare, there's agrotech as well. And the potential really is endless for the population of the continent. And it's one thing we'll definitely be keeping our eyes on here on Business Edge. Now you have Lekan Obajo, who's standing by to give you the latest in international business. You are watching an updated Business Edge, now going to 1 hour starting today. So do stick around. After this, we'll see what's happening on the international business scene.